market movers. This is The Pulse with Francine Lacqua.
Now, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. President Trump has once again extended the deadline for Iran to make a deal or face more attacks on its energy sites. Now, the Wall Street Journal reports that Tehran had not sought a pause in strikes. The president spoke to Fox News earlier.
I gave them a 10-day period. They asked for 7. You're going to say, oh, Trump's a terrible negotiator. They asked for 7, and I said, I'm going to give you 10. Because they gave me ships. We talked about the 8 ships, the president that I talked about the other day. But they asked for 7, and I gave them 10. You got 10 days, and they were very thankful about that.
Well, let's bring in Laura Davison, Bloomberg's Deputy Washington Bureau Chief. Laura, the extension allows more time for talks, but do we even know who's talking to who?
We don't. This is still continuing to be a very nebulous process. There are mediators involved, both in Pakistan and in Egypt, who have been sort of talking with both sides, but it's unclear that there's any direct talks happening with Iran and with the U.S. Trump now has given 3 different deadlines, a 2-day deadline, a 5-day deadline, and now a 10-day deadline to extend these talks, which indicate that he is not super keen on following through on the initial threat that started all of this, which is striking energy infrastructure sites within Iran. Those would have long-lasting problems for the region that would extend long beyond this conflict. So that appears to be a bridge too far. But whether there is a peace deal or at least a ceasefire deal imminent does not at all seem clear. And Trump's continuance to extend those deadlines suggests that the U.S. is not confident that something's going to come together imminently.
So, Laura, the delayed timeline also gives the president extra time to amass extra forces in the region.
Yes, this is, the U.S. has announced several successive waves of additional troops. Earlier in the week, there were about 5,000 Marines that were deployed, another 2,000 special troopers from the 82nd Airborne Division. The Wall Street Journal is now also reporting that the White House is considering an additional 10,000 ground troops. So in all told, that would be about 17,000 additional forces in the region. It'll take some weeks for all of those folks to get there, and particularly if the U.S. decides to move forward with that last batch of 10,000. But this, suggests that the military options are not foreclosed at all if the U.S. is going to all of these lengths to bring new people in. This, of course, Trump has been talking about some sort of peace plan, a deal, but the military seems to be preparing for more expansive ground strikes.
Laura, turning to what's happening at home, the Senate has cleared a path towards ending this partial government shutdown, which has caused, and we were looking at the images, really lengthy airport delays.
Yes, this is a deal that passed in the middle of the night in the Senate. It will then have to go to the House and to President Trump for his signature. This would essentially open up the airport security and make sure that those folks get paid, which have led to historically long delays at airports. People waiting 4, 5, 6 hours to pass through airport security. It could still take some days, if not weeks, for this deal to get passed. But it would mean that the U.S. government would be operating largely with a budget intact. I'll note this deal does not fund ICE and Border Patrol. The Republicans and Democrats decided to separate that out and fund that at a later date. However, most of those agencies are still continuing to operate at a certain level because they have extra funds that are outside of what Congress needs to appropriate.
Laura, thanks so much. Laura Davison, there, Bloomberg's Deputy Washington Bureau Chief. Now let's discuss the Iran war and the impact it's having on global markets. With us now, Henrietta, Pacquement, Fixed Income's Chief Operating Officer at Allspring Global Investments, and Phoenix Kalen, Global Head of Emerging Market Research at SocGen CIB. So thank you both for joining us. I think that the general theme is how do you navigate all of this volatility? Phoenix, maybe let's start with you. Yesterday we had a good panel on emerging markets. It's a bit of a nightmare, actually, especially in the emerging market FX space. I think it was only this week that we spoke to the Philippine president, who said, look, there's not worth spending too much money in propping up the peso because actually what we're seeing will drive investors to the dollar, so it's futile. Is that across the board?
It's not across the board, but there are certainly many vulnerable economies, especially out of Asia, who are so sensitive to high oil prices and to shortages as well. They have very limited days cover in terms of the reserves that they have to kind of supply their industries. So they are in a severe stress, and we think that will be focused on a number of names in the region versus other parts of EM.
But you agree with his general assessment that actually it's not worth propping up right now, and what other countries would you worry about?
Yeah, so outside of the Philippines, we would worry about Thailand as well. India as well, South Korea and Japan. Those are also huge importers of oil, especially from the Straits, and they do have more reserves, but they are going to meet those kind of limits relatively soon. Lots of countries have less than 30 days of reserves left.
Henrietta, I mean, and again, how do in fixed income space, it's kind of the same. It's like there's just a lot of volatility out there. So how do you navigate that?
Correct. I mean, we're seeing incredible volatility day to day. And I think one of the striking things is just the velocity of the market moves as soon as we hear elements of news and how fast it changes. That being said, if you look over a sort of slightly longer period, there are some trends that are starting to appear. Obviously, we're sort of seeing higher rates. We are seeing sort of spreads ratchet up in a normalized fashion, but we are seeing those widenings.
Where do you see the best value in fixed income?
So if you look at what we've been doing, we actually started the year reasonably under-risked because of where spread levels were, and that set us in good stead. So we have been squaring off our portfolios, focusing on diversification, focusing on income, and also nibbling at certain areas of the market where we've seen spread widening.
I mean, to both of you, and maybe we start with Phoenix, how do you actually attach probabilities to outcome? Because we don't know if there's a ceasefire. We don't know how long is the ceasefire. We don't know about negotiations. So is it scenario planning without attaching real probabilities that guide you to what to do next?
Yeah, so it's a lot of scenario planning. Our commodities research team has put out lots of notes, very detailed notes on this, and their baseline scenario, which had been previously, de-escalation by the end of this month, as we move into April, they will have to shift that base case into not just kind of the mild alternative scenario, but the most bearish alternative scenario, where we are expecting for that paradigm shift in energy markets to occur. Brent prices go not from like the 100 type levels per barrel to 150 per barrel in April. So that's what we're expecting as kind of the next phase. And the market is going to drastically react to that because that's a whole new paradigm. And that's a world we haven't actually been in.
Yeah, and this again, are you expecting a repricing, which the market hasn't quite latched on? I don't know whether there's an optimism in the market, actually, that's quite, difficult to get rid of.
I mean, it's a question of time, right? And we said that at the beginning, if it's a short event, then it's okay. But the longer it lasts, the more difficult it becomes. We're now pretty much a month in. We're starting to sort of hit some of the longer scenarios at this stage.
We also have, Phoenix, this headline in the last 20 minutes or so, China starting retaliatory trade probes against the U.S. I mean, the timing of this, giving President Trump is actually, going over to meet President Xi. What does that indicate?
Well, I mean, the timing in terms of like the May 14-15 kind of summit seems to signal that Trump wants some kind of ceasefire, de-escalation, some kind of deal reached before he has to meet with Xi and negotiate all of these trade and tariff things. So I think the market is latching on to that as thinking, okay, there is kind of something on the horizon to alleviate some of these pressures. But at the same time, we are seeing such massive amounts of U.S. troops gathering in the region, and that opens up the possibility for much further escalation.
Phoenix, I get asked actually almost on a, maybe not daily, but, twice weekly basis, whether this is all a play against China, so that, the Trump administration went into Venezuela to make China mad, whether they're doing Iran because they buy their oil and that would put them in trouble. I don't know how, if there's any truth in that, but also how you see these two countries getting along in 2026 overall.
Well, yeah, and this year and for the years to come, there's been this huge theme around reindustrialization in the U.S., which means then that it's so much about the commodities play, securing resources, whether that's in LATAM, whether that's in the Gulf. The U.S. is going after it and wanting to get those commodities, those resources necessary for the revival of manufacturing. So I think this is a long-term theme.
Henrietta, what are treasuries today? Again, we were talking about a move away from U.S. assets. I don't know what this new war, but also geopolitics, mean going forward.
It is an interesting discussion, and we have seen some diversification away from the US. That being said, it is a huge pool of assets, so it's actually quite hard even for international investors to sort of move away fully from the US. So I think it's what investors are doing with incremental allocation that they have. They may think twice before allocating to the US. And if you look at what's happening on the Treasury side, you've got a number of dynamics at play. Obviously, you've got what's happening in the Middle East at the moment, and that it's inflationary potential. So we're seeing some of that. We are sort of seeing issues on the budget side as well, right? So that is also playing on the Treasury piece. So a lot of dynamics coming into play.
I mean, which central bank has it hardest? I mean, no one has it easy, okay? So that's our basis.
Yes.
That's our starting point. But is it the Bank of England?
I think it probably is the Bank of England, to be honest. Why? Because the UK is such an open economy and is a little more subject, because of its size, to be pushed around by the markets.
And we've seen this huge move in gilts
Correct.
More than others. I mean, when does this really become problematic?
I think it probably already is problematic if you look at where levels are now. The economic growth picture in the UK was starting potentially to improve. It really didn't need the crisis that we have now. I think it's definitely not helpful.
I mean, I imagine both of you spend quite a lot of time thinking about inflation, right? Even if there is a ceasefire tomorrow, what happens to inflation? Because it takes a longer time to readjust some of the oil flows. We don't exactly know how much damage also there is in some of these infrastructures.
It's going to be quite different across the economies. For places like Egypt and Turkey, they are going to see huge inflation spikes in the short term because of how sensitive they are to commodity prices, to oil prices, and how that sensitivity actually has accelerated over the past 10 years because of their various devaluations. So some countries are much more vulnerable and will see much higher prices. CEE region relatively contained in terms of a short upward pressure on CPI, but broadly going to stay within the forecast range.
So obviously the energy side is the one that's sort of hitting the news the most. One thing we're also keeping an eye out on, and that's also the sort of question of time coming in, is the whole agricultural picture and fertilizers and what that means for the growing season. I think that is something that is sort of maybe a little more under the radar at this point in time. But I do think that the longer this stays, the more it becomes an issue.
And this is an issue across the board. Or again, are there countries that are more vulnerable, or how do you look at it from a credit perspective?
So obviously there's some countries that are going to be more vulnerable. I think it also depends, when the sort of growing seasons and the planting seasons happen. So you sort of have to sort of follow that across the globe. But it is something that is likely to start hitting in the next few weeks.
I mean, to both of you, there is a lot of people are overwhelmed by the pace of news. Is there a data point that you look at to give you a good indication of what we should be watching out for? Is it comments from the president of the Philippines or things like that really help you inform where the market is going that is different from previous crises?
Yeah, it's anecdotes about what's actually happening on the demand side and whether we have some kind of demand collapse in response to the supply shock. So I think those indications about what's actually happening with airlines canceling flights, governments announcing that Wednesday is going to be national holidays going forward, kind of thing, to curb energy consumption. Yeah, those things are quite important to see how countries are actually reacting.
Yeah, you, Henrietta?
So I think one of our focuses is really on the sort of portfolio construction and how we create portfolios that are going to be resilient and able to deal with volatility. I think that's one of our big focuses at the moment. So making sure that we got income, so that we have that income protection, being thoughtful about what we're doing from a duration perspective, and as I mentioned, really sort of thinking about the diversification piece as well.
I mean, we're focusing so much on the war, and inflation. Does the partial government shutdown in the U.S. and the possible alleviation of that change anything?
It's helpful, right? But I think what we're also being careful about is thinking about other themes, right, that we need to have in mind in our portfolios. I'm thinking AI, and these are sort of longer-term effects. You can't forget about those, despite all the noise in the news.
And private credit. Thank you
and
both.
Private credit.
And thank you both for joining us. Henrietta Pacquement, Fixed Income Chief Operating Officer at Allspring Global Investments, and Phoenix Kalen, Global Head of Emerging Market Research at SocGen CIB. Coming up, U.S. Secretary of State Marco Rubio joins his G7 colleagues to discuss reopening the Strait of Hormuz. We'll talk about that next, and this is Bloomberg. Conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, U.S. Secretary of State Marco Rubio is in talks with G7 foreign ministers in France. Rubio says it's in the G7 nations' interest to reopen the Strait of Hormuz. Well, let's go back to Oliver Crook, Bloomberg's chief Europe correspondent, who's in Vaux de Cernay. Hi, Ollie.
Yeah, that's right, Francine. Before G7 foreign ministers who are gathered here, we should say the Saudi foreign minister is also here. The issue of Iran is front and center. And sitting behind me in that room, you have Marco Rubio discussing with the other allies. Standing right next to me is the voice of French foreign policy, is Pascal Confavreux, who is the spokesman for the French Foreign Ministry, the host of this meeting. Thanks so much for joining us.
Thank you.
In these conversations that we're having now with the Marco Rubio, what information do you need to get from the U.S. Secretary of State?
You know, the G7 that was invented 50 years ago, a stone's throw away from here, has two goals: is to create a cohesion between the leaders and to have results. We want here a G7 of results on cross-cutting threats and also the big crisis internationally, namely Iran and Middle East, and second, of course, Ukraine. So that's exactly what they're going to discuss during the whole day behind these doors.
And Emmanuel Macron has been fairly deft in sort of hedging himself on the war in Iran, originally saying that the French will have no involvement, but being very quick to say that there should be a role of the French and others, coalitions, to open up the Straits of Hormuz at the appropriate time. We now understand there's discussions of more than 30 countries. Can you talk to us about how far those discussions have progressed and what this coalition of the willing is willing to do?
So it's the coalition of the willing is more for Ukraine, but you're right. It's also another kind of coalition of the willing. There are consultations taking place at the level of the chief of staff of the armed forces yesterday, including European members, regional members, and also extra-regional members states such as India or South Korea. These consultations are extremely important to see how such a mission could happen, being in mind that it would take place after the end of the bombing first, and not to be only in a defensive situation. So we are going on this first step. There is a second step, which are the discussions at the United Nations now.
And you say after the bombing, but of course wars don't necessarily end completely cleanly. What conditions would have to be in place for the French to join in on such a mission?
We are preparing such a mission with all the willing partners, but we have made very clear that this war is not our war, and we don't want to be entangled into it.
And you talk about cross-cutting threats. There's going to be an effort in that room right now as we speak to link the war in Iran to the war in Ukraine, saying that the battle lines are clearly drawn and that Russia is on the other side of that line from the United States. Is that a successful message, you think, to the Americans?
We think that there was an important cooperation between Iran and Russia. Iran has been also condemned and sanctioned at the European Union level for helping the Russian aggression of Ukraine during these last weeks and months. The Minister Jean-Noël Barrot has been part and parcel of this effort, and we have all reasons to think that this cooperation continues to exist between Russia and Iran at present, and that it can indeed hit assets that Iranians are targeting at present.
And I'd like to discuss the path forward for Ukraine, because we're reaching a a sort of critical moment for Ukraine. There's a sort of fiscal cliff for the Ukrainians in terms of funding. That 90 billion euros has been blocked at the European level. There's now reporting that American hardware, military assets are being rerouted to the Middle East. How do you see the situation in Ukraine progressing?
So first, it's not what's happening in the Middle East that will make us forget what's happening in Ukraine. Second, if you look at the situation on the field, the Ukrainians are doing actually well. We all thought that they would be ended up in 4 weeks. It's now 4 years that their bravery is taking place day after day. And third, we stand shoulder to shoulder with them. The European Union is now by far the first provider of help, both economically or militarily. You said it. We have a 90 billion plans that is not adopted yet, but that will be, and we are totally sure of that, adopted in the days and weeks to come. And we will find solutions for the very short-term short-term needs that you are talking about.
And I also want to get your reaction to some reporting we've seen from the European foreign ministers' meetings, where we've been hearing that the Hungarians have been briefing directly to the Kremlin after those meetings, and there hasn't been really any sort of formal objection to that fact. Do you believe that that is the case? And if so, what should the Europeans be doing? What should France do about that?
Well, we take that very seriously. I don't want to make political comments about it. What we want to state once again is that there have been 19 packages of sanctions. Yeah. And these packages of sanctions adopted by the European Union, they have been adopted at unanimously. So you show how united also we stand, and united during the long run, because it's been 4 years that we've been into it now.
And I also want to get your perspective on how advanced the talks about nuclear deployment of the French nuclear umbrella. Obviously, there was a very big speech by Emmanuel Macron a couple of weeks ago in front of that very impressive submarine, talking about potentially deploying French nuclear assets to other European nations. How advanced are those conversations?
There has been a very good welcome by our colleagues of the member states of the European Union on that speech. It's called Advanced Deterrence. That was proposed by our president. And so these talks are now ongoing with 7 and 8 countries, and they are going in the right direction.
And you elicit the sort of birth of the G7 format was a stone's throw away from here in Rambouillet, as I recall, about 50 years ago. But since then, now you have the Trump sort of foreign policy that's sort of blowing up that multilateral sort of trade structure. Where do you see the sort of format of the G7 evolving? In France, as the president of that for the next period of time, what do you hope to achieve during that period of time?
More necessary than ever. To have these direct talks, even if we don't always have the same ideas. And so these moments like these, they can bring concrete results, one of which was announced yesterday, is the collective effort to fund the restoration of the dome of Chernobyl. You know that it has been hit by a Russian drone in 2025. It's a small hole, actually, but it cost $500 million to restore. Yeah. So there is a common effort here to restore it, and it shows how dangerous this Russian aggression of Ukraine is.
Well, Pascal Favreau, thank you so much for your time. There is the spokesman for the French Foreign Ministry, who, of course, are playing as host to this G7 meeting here outside of Paris.
Ollie, thank you so much. Bloomberg's chief Europe correspondent Oliver Crook there speaking to Pascal Confavreux, France's foreign ministry spokesperson. Now, this is a picture for markets across the board. We did have a little bit of a downturn when it comes to European stocks. Stocks in general extending their route after China launched these trade probes into the U.S., adding to nervous sentiment driven by fears of a protracted war in the Middle East. I'm looking at global bonds. They're also extending their slump. Treasuries falling alongside them. The dollar actually a little changed. Gold gaining. Traders, again, fearing this broadening impact on energy supplies and oil prices, stoking fears of inflation spiraling that could force on central banks to tighten monetary policy. You can see S&P futures practically flat, as are NASDAQ and Dow Jones futures. Coming up, Iran drafting legislation to unilaterally impose fees on vessels seeking safe passage through the Strait of Hormuz. We have President Trump's reaction to that controversial draft bill. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump delays U.S. attacks on Iran's energy by 10 days, claiming the two countries are negotiating. Brent crude is on course for a record monthly gain. China retaliates with trade probes against the U.S. ahead of President Trump's visit to Beijing in May. Plus, the U.S. Senate forges a path towards ending the partial government shutdown. Lawmakers under pressure to fund the Department of Homeland Security with record queues at airports across the country. So the Iranian parliament is working on a draft bill to impose a fee on vessels seeking safe passage through the Strait of Hormuz. That's according to the semi-official Fars news agency. Now, the narrow waterway has been all but closed since U.S. and Israeli strikes on Iran began almost a month ago. President Trump was asked about the issue by Bloomberg's Anne-Marie Hordern.
Should Iran be able to charge a toll for the Strait of Hormuz? They're charging some vessels to go through.
Oh, yeah. Well, should they be able to? I mean, they shouldn't be able to, but they're doing it a little bit. I don't know. Look, their capability is a lot less than it was 2 weeks ago. And with every week and every day, frankly, it gets less and less. All I can tell you is they're begging to make a deal. So let's see what happens.
Well, let's get more on the situation in the Middle East. I'm joined now by Jasmine El-Gamal, Averos Strategist founder and former Pentagon advisor, and Paul Wallace, Bloomberg's managing editor for Middle East and Africa. So thank you both for joining us. Paul, what do we know? Who's negotiating with who? Because it's unclear, actually, and it changes quite often.
It's still pretty unclear, but the best we can say is that Iran and the U.S. are exchanging messages via Pakistan. Pakistan is essentially the main mediator at the moment, and the latest thing is Trump extending his deadline to, blow up Iranian power plants if Tehran doesn't take an off-ramp and accept a deal. He's extended that until April the 6th, so for another 10 days. Iran remains still very consistent in its message that it doesn't seek negotiations, and it's got some pretty sort of tough demands pretty much to even begin those negotiations. They include getting some kind of recognition that it controls the Strait of Hormuz. It wants reparations, and it also wants Israel and the U.S. to say they won't attack the country again once this conflict is over. Those are demands which I don't think the U.S. and Israel are likely to accept. So we're at an impasse at the moment.
Jasmine, I mean, do you think this is, again, because both sides are trying to, save face at home, or is it really that they just start from very different starting points, that the two, this is a fight for survival, and so they just want very different things?
That's right. I mean, what you're seeing right now is basically each side trying to set the stage for future negotiations. They're trying to amass as much leverage as they have so that when they inevitably sit down at the negotiating table, they're not operating from a position of weakness. So you see the U.S. trying to impose a lot of costs on Iran and vice versa. I think it's important to parse through the different objectives that Israel and the U.S. have, because they're not exactly aligned on what they want. Israeli objectives are much more long-term. They want the eventual complete capitulation of the regime. They want an entirely new structure in Iran. And as Prime Minister Netanyahu said, I think just yesterday, they eventually want the Strait of Hormuz to be completely bypassed, and they want new routes going through the Arabian Gulf and Israel. That's the way he described it. The U.S. doesn't think that long term and doesn't necessarily want those same things. So when we look at just the U.S. and Iran, I think the biggest mistake, I'll just say lastly quickly, is that Trump keeps changing his deadlines, and I think Iran sees that as a sign of weakness on the American side. And in order to compensate for that, Trump may have to do something like military action over the weekend to restore the balance.
Yeah, what do we know the U.S. and Trump administration now want? I mean, I don't know whether the price of oil going up by so much was a shock, and so they just need to find a solution quick.
Yeah, they do. I think Trump, he needs the Strait of Hormuz to be reopened. It's as simple as that. Brent today is trading at about $110 a barrel. We have analysts at banks like Macquarie saying, if this strait is not reopened by June, then we're going to $200 a barrel, which would presumably cause chaos with the global economy. We're already seeing big signs that Western economies are being hit hard through PMIs from this month, March, and all that. So Trump needs Hormuz reopened. And just a note on Iran and its stance, that it's still taking a pretty hard line even on negotiations. Attacks continued this morning. It's fired missiles at Israel. It's fired missiles and drones at Saudi Arabia, Bahrain, Kuwait, and Doha in Qatar got its first missile alert today for days. So the war continues as normal for now.
Yeah. Jasmine, I mean, you were saying that something could happen this weekend. I mean, is this boots on the ground? Like, how would President Trump restore this balance?
Well, I think we have to prepare for all options, right? I mean, there are options all the way going from just continuing to threaten to forcefully open the Strait of Hormuz. Interestingly, you've seen the UAE over the last few days steadily release statements and op-eds and making it clear that the UAE is now firmly in the camp of using force against Iran and trying to neutralize the regime's capabilities. But there are also possibilities for boots on the ground. There are senators that have just listened to classified briefings in the U.S. that came out and said, I am not authorizing boots on the ground, and you should be really worried about this. So I think what's important, we don't necessarily know which way Trump will go, but I think we have to be prepared for a scenario where he does put boots on the ground, even if it's not the most likely scenario.
Do we have a better understanding now of how many weapons and drones Iran has access to, or how fast they can build them? Because this took everyone by surprise.
We do know that they're capable of replenishing at least their drones and some of their ballistic missile program, although it's a timeline, it's competing timelines. How fast can the U.S. and Israel degrade versus how fast Iran can resupply? But it's also important to note that Iran hasn't fully activated all of its options yet. As I think we mentioned before when I was here last time, the Houthis are still fairly quiet. They could come out at any minute. And Iran has not played all its cards yet. Iran playing its cards has less of a cost for them domestically. Obviously, it's not a democracy. They don't answer to their people, than the U.S. playing more and more cards. So I think also time is not on the U.S.'s side if escalation is where we're headed here.
Paul, I don't know what to make of the fact that Iran is drafting this law to introduce tolls for the Hormuz transit. I mean, if you're physically in control of the strait, I mean, do you really need to draft a law?
I think it's hard to tell exactly what Iran means by that, but I think in whatever the case, it's a show of confidence on the part of Iran. I mean, it would be a strategic disaster for the U.S. and the West and the Gulf Arab states if Iran ended up with any kind of control at all over passage of commercial vessels through the strait once this conflict is over. I mean, that would be a nightmare scenario for all sorts of reasons. But Iran, at the moment, probably feels that this is a negotiating tactic to put the U.S. under more pressure. It's hard to tell whether it literally thinks it will be able to treat the Strait of Hormuz like Egypt does with the Suez Canal, for example, after this war is over. But I think it just shows how confident Iran is, at the very least, that for now it can keep the strait closed.
What's the probability, Jasmine, of a diplomatic solution?
Well, it obviously would be the best way. The best scenario here, best case, is for Trump to just declare victory, negotiate some kind of solution between the U.S. and Iran to keep the straits open, and just call it a day and take down the temperature. The problem is that if he does that, Iran comes out of this declaring complete victory, and the Gulf states remain vulnerable because Iran maintains the capacity to harm them or even just to intimidate them moving forward. That's what makes me think that we're not done just yet before we head into negotiations. I think Trump needs to restore that balance of power between the U.S. and Iran, protect his Gulf allies moving forward into the future, gain some strategic I can't think of the right word, sorry, but make sure that Iran doesn't have the ability to intimidate them moving forward. He has to get that guarantee somehow, and then they can go to negotiation. So that's what makes me think we're not over the hump just yet.
Yeah, and Jasmine, it kind of goes to, to a lot of our reporters are trying to figure out how this new Ayatollah will be different to the previous one and whether he's more of a hardliner.
Exactly. I mean, given his comments in the past and things, there is an argument to be said that, yes, Mojtaba Khamenei is more conservative, more hardline than his father, Ali Khamenei, who was assassinated on the first day of this war. It's hard to tell his thinking at the moment. He hasn't been seen in public at all since the war began, and even since he became supreme leader. The U.S. says he's injured, perhaps badly. So it's hard to tell. The Speaker of Parliament seems to be calling a lot of the shots at the moment. But I think, going back to what Jasmine said a bit earlier, time is on Iran's side. That's a crucial point. They see this as an existential fight. They are literally fighting for the survival of the Islamic Republic as they see it. And in that case, time doesn't really matter. They can keep going for as long as it takes to keep to survive.
Jasmine, who do they have left in terms of allies? So Russia, we understand maybe there's some intelligence sharing, but unclear to how much more Russia can do given their own situation. North Korea, I mean, could they get involved in this?
I don't think you're going to see countries really getting involved. I think right now every major actor realizes that the temperature needs to be taken down. This is now affecting the entire global economy. Every city, every household in the U.S. to China to Europe. This is in no one's interest to continue except for Iran saving its regime. And so I think what you're going to see, the question is not how many allies Iran still has, but whether countries in the region, international allies of the U.S., can get the U.S. to start taking down the temperature and moving towards negotiations. Iran is going to be isolated no matter what, diplomatically, but that doesn't really matter in the situation that we're in right now. It's about who can convince the U.S. president that this is not in anyone's interest. He's going to have to end this war in a way that is not necessarily in favor of the U.S., but he's going to have to do it. Who can convince him of that remains the million-dollar question.
Well, price of gasoline of $5, that'll convince the president, right? I mean, we're almost there. If you look at, we had a Macquarie, saying like, look, the price of oil could go to $200, but I think gasoline is above $4. This is problematic for him.
It's very problematic when you're heading into midterms in November, and with the economy such a big part of how Americans will vote. And, I know California has its own issues with taxes and things, but we're above or very close to $7 a gallon there. So, this is not what Trump wants. He is throughout his time in office during term one and even the second term, he has gone on and on about gasoline prices. He said that they were too high under Biden, and he's taken pride in the fact that at least until this war, he kept them much lower, or they were much lower under his presidency than they were under Biden. That's now, that's completely reversed. It's a big issue for him.
Okay, thank you both for joining us. We have a wonderful blog that I know your team are working on, and in the blog just minutes ago saying that actually Iran has also turned back 3 container vessels in Hormuz. Thanks so much for joining us, Jasmine El-Gamal, Averos Strategist founder and former Pentagon advisor, and Paul Wallace, Bloomberg's managing editor for the Middle East and Africa. Now, Ukraine risks running out of money to pay for its defense against Russia within 2 months. That follows Hungary's veto of a 90 billion euro loan and spat over the IMF's latest aid package. The EU foreign policy chief Kaja Kallas urged the U.S. to support Kyiv by capping oil prices, which are boosting Russia's war chest.
Clearly, these two crises, two wars are linked. If you hear about the intelligence that the Russians are providing to Iran so that they could attack Americans. So, the response of the Americans should also be not to help Russia. And there it is important that the oil price is capped and they don't have the funding to actually go on.
And do you think those reports about that intelligence sharing and potentially drone deliveries we're talking about potentially to Iran from the Russians, does that make the sort of battle lines a lot clearer for the United States, and does that then put the United States on the European side of those lines?
Well, it's very clear for us where the lines are, and clearly, Russia is not on the side of Americans. That's very clear. So there should also be pressure on the Russians because they are providing drones, but also intelligence.
Kaja Kallas there, the European Union policy chief. Now, NATO's European allies and Canada both raised defense spending by 20% for a second straight year in 2025. The NATO estimate reveals a total increase of $574 billion after yielding to the U.S. president's demands and responding to escalating threats from Russia. Well, Secretary General Mark Rutte says it reflects a shifting balance within the alliance.
For too long, European allies and Canada were over-reliant on U.S. military might. We did not take enough responsibility for our own security. But there has been a real shift in mindset, a collective recognition of our changed security environment.
And President Volodymyr Zelensky says Ukraine and Saudi Arabia has signed a defense cooperation agreement focused on technology sharing and investment. During a surprise visit to the Gulf, Zelensky offered Ukraine's specialized anti-drone expertise to combat Iran's drones. Now, in exchange, he's asking for support in securing supplies of critical U.S.-made missiles. Now, traditional allies are seeing the U.S. under Donald Trump as a less reliable partner. They're looking to hedge their bets by way of China. Here's a preview of this week's Bloomberg Originals documentary.
There's a phrase which China's President Xi Jinping likes to use. The world is undergoing changes which have not been seen in 100 years.
Now these changes have appeared to arrive, but they're delivered unexpectedly by Donald Trump.
Epic fury. I said I like that name.
Amid the noise of war, the stance of another major power is speaking volumes.
The US is demonstrating itself to be a force for instability in the world. And that gives President Xi and China a chance to present themselves as the adults in the room.
China is happy to see the United States getting bogged down in the Middle East. China has long viewed the existing order as being too dominated by the U.S., so Trump's challenges to that order actually presents Xi Jinping a very good opportunity, and the question is whether Xi is ready to seize it.
In many ways, he already has.
Trump's first trade war made China realize that dependence on the U.S. is a very dangerous thing. China's exports to the U.S. fell about 20% last year, but in the end, China had a record trade surplus hitting $1.2 trillion US.
China deliberately tried to diversify away from the U.S. as a consumer base.
So, do Trump's actions strengthen China or expose it to more risk it cannot control?
And you can watch the full piece online, including the Video Hub, Bloomberg Video Hub, and YouTube. Now, coming up, we'll talk to Amy Gower, metals and mining commodity strategist at Morgan Stanley, as gold slumps almost 17% since the Iran war began. That's coming up next, and this is Bloomberg. Gold has fallen almost 17% since the Iran war began nearly a month ago, moving in tandem with stocks. Now, spiking energy prices have raised the risk of inflation, raising bets that central banks will leave rates on hold or even hike them. Now, adding to the downward pressure, Turkey's central bank has offloaded more than $8 billion worth of bullion. Well, Amy Gower, metals and mining commodity strategist at Morgan Stanley, joins me. Amy, thank you so much for being with us. I mean, there's a number of factors, right, that could lead to explain the gold trade in recent years. Central banks diversifying reserves away from the dollar, investors seeking alternatives to bonds. But then in the last couple of weeks, it's really tricky also to understand what gold represents.
Mm-hmm.
Yeah, look, I think we've had a shock clearly here with the conflict beginning, and I think it's not unusual to see gold initially pull back when we do get these shocks. We saw that in COVID, we saw that at the beginning of Russia-Ukraine, we saw this in Liberation Day, and this is where gold's liquidity works against it. It is your most liquid asset. It is what you sell to free up cash, whether that's to pay margin calls or reallocate elsewhere. It does also look like we've had a bit of technical selling. We definitely found support at key moving averages, for example. We bounced off the 200-day, so that suggests that there's perhaps some technicals behind this. But I guess the difference for this shock versus maybe, say, Liberation Day is that what it means for inflation and central bank actions around interest rates. And I think, look, here we have seen the pricing on the Fed change from expecting rate cuts to rate hikes. We know gold is sensitive to that. We've had the dollar creeping higher as well. And if we remember last year, we did have arguably safe haven demand for gold, but with a weakening dollar, and that's highly unusual. So we're getting kind of the reversal of that as well.
So it doesn't fundamentally change your view on what gold could become?
I think, look, gold should still be that real asset. We should still be thinking about, I think that shift in investor demand for real assets that took place last year, as particularly with concerns around fiat currency debasement. I think that narrative is still there, but I guess at the moment we do have to deal with some of the changes. And one thing I would say is, if you say your two big buckets of gold holders or gold buyers have been central banks and exchange traded funds, look, we can come on to Turkey and the sale, but the exchange traded funds they can flip from selling to buying and back again. In 2024 they bought zero. In 2025 they nearly bought as much as the central banks, and so they are quite sensitive to what the Fed is doing. And I'd say if the narrative does start to become that we are at risk of a hike or maybe a longer pause, you might see that liquidation coming through.
I mean, could you see more central bank selling of gold?
Yeah, look, it's always tricky to say. I mean, Turkey, obviously, it's a large amount, 60 tons of gold. Central banks collectively bought about 860 last year. I think already we were seeing a slowing pace of buying, so then it doesn't take much selling to start to weigh down. There were some discussions, I think, in Poland around as well, a more active management of their gold reserves. I mean, Poland was the largest buyer last year, so if they started to sell, that would obviously have an impact as well. I don't think anyone else has said it as of this point, but definitely I would expect a slower pace of aggregate buying.
And Amy, I mean, I guess apart from, we focus so much on oil and gold as an asset, is there anything else in that space that you worry or that hasn't behaved the way that we thought it would in the mining world?
Yeah, so look, I would say base metals are having a sort of a push and pull factor as well, and maybe aluminium is the one that stands out here. So aluminium is the one where everyone's first attention was drawn to what could be disrupted by the Middle East. So the region is about 9% of aluminium production. A lot of that leaves as exports, and at the moment, obviously, that anything stuck behind the Strait of Hormuz is not really making its way out. The region is also very dependent on imports of alumina and bauxite. So again, are we running close to critical levels on those raw materials? So aluminium initially had a lot of support both to the price and also the regional premiums. That's now come off a little bit because we're starting to worry about growth. And so I think that's where the base metals have this push and pull. At the moment, it feels like aluminium is still outperforming the rest of the complex, which I think makes sense. But we'll have to see, where these growth worries go.
I mean, I get it, because we're starting to think about possible demand destruction, right? If everything goes, what data points do you look at first to have a sense of, is it some of the data coming from China or elsewhere, to understand where some of these base metals go?
Yeah, look, I think China's the place where we typically get the most data. I would say actually on copper, that's been looking fairly encouraging with this pullback. So we've seen copper inventories in China pulling back faster than normal. We've seen physical premiums in China jumping. So it does actually suggest maybe that they've been buying the dip a bit here. I guess elsewhere is maybe where we'd see more of a slowdown. But what I would say is this is not 2022, which is where we had a very big demand shock. But part of that was exacerbated by the supply chain was very well stocked. We'd had the COVID supply chain shock. Everyone had started to hold a little bit more, that just in time to just in case. And then as interest rates went up, the cost of financing that went up and everyone destocked. I would not say we're there. I think if anything, this could actually prompt that restocking cycle when things have settled, because suddenly everyone's realized how vulnerable their supply chains can be.
I mean, how fast could that happen? Is it impossible to say at the moment?
I think it's difficult to say, and again, it's going to depend on interest rates because we have to think about the cost of financing. But I think, particularly as we go into 2027, I would expect, you're going to have to start hearing about stockpiling, and even at the government level, not just at the country level, company level.
Company level. Amy, so interesting. Thank you so much for joining us. Amy Gower, the metals and mining commodity strategist at Morgan Stanley. Now, again, if you look at everything that we've lived through this week, it's stocks. We've had a great roundup from Amy on everything that metals have been doing today. Stocks seem to be extending their rout after China also launched these probes into the U.S., adding to a nervous sentiment driven by fears of a protracted war in the Middle East. Global bonds extending their slump. Treasuries actually falling alongside them, and the dollar little changed, with gold gaining. If you look at traders, if you look at S&P futures, Dow Jones and NASDAQ, they're pulling lower a little bit more than they were just 15 minutes ago, down 0.2%. And it's really this fear of this inflationary spiral that could force central banks to tighten monetary policy that we're on the lookout for. Up next, it's Bloomberg surveillance, and this is Bloomberg.